Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the CO2 data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, the first thing to keep in mind here, by starting from the technical side of the market here on the monthly time frame, is that we have a very strong monthly demand and support area, which the market formed here when it made the first test of this area and got rejected to the upside. Then again, the market went and tested its zone and respected it as support, creating this rejection to the upside. And in the moment, it seems like the market has shifted once again to a bearish market, creating a series of lower lows and lower highs. So it seems like there is a possibility for the market to go for another test of this quite strong historical structure level for this market before then getting rejected to the upside. So here on the monthly, we could expect some short-term bearish price action into this zone. So we could expect more bearish price action for this month and potentially also the followings. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, we see a bit of a different scenario. In fact, we can notice how we had a quite strong impulse to the downside. Now, after an impulse, what you would expect is a correction and then more bearish continuation. Especially, you would like to see a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, what we can see is that if we take our Fibonacci from the high to the low of this impulse leg, the market has not corrected to the 0.32 yet, meaning that we could expect some more deeper correction before then getting the continuation to the downside that we would like to see by looking at this market from a monthly perspective. So we could expect some short-term bullish price action and then some potential longer-term bearish continuation. Going down on the daily time frame, what do we see? Now, this is where things get quite interesting. Now, I did speak about NZDUSD a few days ago when the market was here and explained other reasons for which we could expect this rejection to the upside and for the market to create a new daily higher high, which is in fact exactly what the market did. And by the way, I will link that previous analysis in description so you can go and check it out for more free education. However, what we can see is that at the moment the market is still above support. Until the market will remain above the support, even if it got rejected to the downside, anyway, we could expect that deeper correction that we would like to see from a weekly perspective, and only at that point we could get the move lower. However, the level that is the interesting one, at least at the moment, is this support, because until the market will remain above this support, as we said, we could expect a bit more bullish price action. However, if we get a break below that support, at that point that would open up the way for the market to go and test that monthly support level, which is the downside target that we have identified at the beginning of the video by looking at the monthly time frame. And since this is a very strong previous daily support area, if we get a successful break below it, after the break on the retest of this previous daily support and resistance, this is where we would have very interesting price action. And this would be a very interesting area, inside of which we could see more potential institutional shorting, which at that point would further increase the probabilities of a potential move lower away from this area. Now, if we go and see what we have when it comes to the commitment of traders, so the CO2 data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the NZD, what we can see is that with the last report, we went from having a positive 1.5k net positions all the way down to having a negative minus 14.6k net positions. So essentially, institutions went from having more longs than shorts to now having more shorts than longs, with 29.4k shorts compared to only 14.7k longs. So the NZD is getting very bearish because it's getting shorted by institutions. And what we have to keep in mind is that all currencies on the spot are traded against the USD. So if we're checking the data for the NZD, we're actually already checking NZD USD. So as I was saying, until the market will remain above this support, this market can easily continue higher. However, if we get a break below the support on the retest of the previous support and resistance, this is where we have good probabilities of seeing more institutional shorting, since institutions have already been shorting, and that would at that point further increase the probabilities of a potential move lower away from this area and into that monthly demand and support that we have identified at the beginning of the video. So if we get a break below the support on the retest of this previous support and resistance, how we could be approaching this potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the CO2 data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a huge special promotion in which you have a big discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that there is still time to join before the offer expires and price goes back to normal. So I really suggest to go and take advantage as soon as possible. Directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. And I suggest to go and check it out at transparentfxtrading.com. The link is also in the description, and I will see you in it.
If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.